Welcome to QuickBooks tutorial. In this video, I'm going to show you how to use QuickBooks Enterprise for your financial service firm or your finance company. Now, whatever I share in this video can actually work for QuickBooks Pro, Premier, and Enterprise. So, but then I just need to be specific because I noticed that a lot of people are looking for a guide on how to use QuickBooks Enterprise for financial service or their finance company. So, what about finance company are we looking at? So, whether you run an investment banking uh, operation or an asset management company or private equity, this video will help you understand QuickBooks setup, and you'll be able to see how I use QuickBooks to help some of my finance clients to manage their operation. So this particular tutorial is divided into sections. Now, the first part is the setup part. So under the basic setup, you would see how to set up your clients' records and their portfolio balances. So if you run a finance company that requires your clients to probably pay you or send money to your account, or you maintain a client account where clients send money to you, or maybe even shareholders too. Maybe they send money to you and then you're able to collect money from shareholders, and then you want to track how much each shareholder has invested in that company, and are also able to see what their balances are at every point in time. Meaning, when you generate a report of all the shareholders, you're able to see what each person has invested, or maybe you maintain client records too, and you want to see what each client has invested in that particular company. So we will discuss that. And then we have the vendor records and their payable balances. So vendors are your service providers or your product suppliers. So, but here, maybe you have vendors you deal with, for example, for when it comes to software subscription, market data analytics, you have a company that is providing that information, and then you have a consultant, you have whatever vendor that provides services to you as a financial service firm. You also have a way to, there's a way to post them on the system. Now, most importantly is the chart of accounts. No, chart of accounts basically categorizes all your transactions to either income, expenses, asset, or liability. So if you run a financial service firm, definitely you would want to record and categorize all your transactions, either an income transactions, expense asset. So that's most likely be taken care of under your chart of account. So chart of account actually determines how your financial reports will be generated. Now, the other one is multi-currency. So for a financial service firm that deals with multiple currencies, maybe you even invest in foreign currency and you're engaged in FX transactions. So I will discuss how to create multiple currencies on the system, and also how to create multiple currencies bank account. So in this tutorial, we're going to assume USD as your balance. Now, whatever currency you use, it doesn't matter. The same process will follow. Then we'll then discuss investment portfolio. How do you set up your investment portfolio in QuickBooks? Maybe you have invested in equities, you invested in treasury bonds, you invested in certificate of deposits, maybe even government bonds. Whatever assets you have invested in, I will also show you how to set up that asset in QuickBooks and then under your investment portfolio. And importantly, again, is your revenue stream as a financial service firm. How do you make money? Maybe you provide advisory services to your clients, maybe, and then you charge them for that. And then you also make money from management fees and charges, maybe on whatever amount they are bringing in into the company. You also provide corporate training, and you make, so whatever form of revenue that is available to you or that you've been exploring to bring in more cash flow for your business. Now, system also allows you to set that up too. So that is the basic setup. Then we would move to transaction. Now, under the transaction part of this tutorial, I'll discuss how to invoice your clients for the rest services provided and also receive payments into your bank account. For instance, you're providing an advisory services to a particular client, maybe on how to raise money via debt, or maybe how to issue more shares, or how to go public, maybe IPO, or maybe you're providing corporate training or corporate finance training on maybe investment, or you are probably guiding, no, so whatever financial services you are providing at that point, I'll share how to raise an invoice and then send to your client, and also how to receive payment on that. Now, an important part of your transaction as a financial service firm is the portfolio management. So I would also discuss how to record investment in stocks, but that's equities, and then treasury bonds, and then COD, whatever investments you undertake, how do you put money? So when you buy more of that asset, how do you post that in QuickBooks? And then important part again is how do you record dividend income? When you have invested in equities, there is room for you to be able to record income from that investment. So if it's an equity, maybe you have collected your dividend income, how do you post that into the system? And again, how do you record the interest return on financial instruments? That's very important. When you invest in treasury bond, COD, fixed deposit, there's an interest accrued on that particular investment. So how do you record that? So if it's an investment with periodic returns, so I'll also show you how to track interest earned but not received on your investment, very important. And then how do you treat revaluation gain or loss on changes in market value of your financial instrument? When you buy a financial instrument, the value doesn't the value changes based on market condition, depending on demand and supply, if it's equities, or depending on the interest rate expectation, if it's bond or whatever asset you're buying. So how do you track gains or loss in that particular asset at the end of the year? So how do you record that? And then how do you post sales of financial instruments, or when you write off an asset on maturity? So how do you post that on the system? So these are some of the things that I think QuickBooks can do for you as a financial service firm. And then on banking, how do you post fund transfer from one bank to another? And then how do you record expenses? Now, expenses like direct or indirect. Now, your direct expenses will most likely be like interest expenses, maybe payment of your client. Maybe when you pay your client for or from part of the profits that you have generated. And then indirect expenses could be administrative expenses and all that. Now, exchange rate updates. How do you update your exchange rate on the system whenever there's need for that? Now, reconciliation and then your statement of account. So the final one will then move to financial report. So everything will be doing from beginning to the end, will most likely be reflecting on our financial report. So how do you record interest income and dividend income reports? How do you record your profit or loss, even your balance sheet, your cash flow, every kind of reports you need to generate. And even you can even generate investment portfolio specific reports. Or how do we look at our report on equities? How do we see how much we've invested in equities? How do we track changes in value of our equities? And how do we look at the current value of our equities? You're able to do that on this system. So let's move to QuickBooks to start the setup properly. So the first one is the basic setup. So the basic setup here is you're going to set up your client's records and your shareholders. So on QuickBooks, you come here, right here, and then this is a dashboard. So I've created a demo company called a Smart Investor Asset Management. So we're going to be using this to demonstrate everything that I've described in our course outline. So first one is the customer section. So you go to your customer center. Now in QuickBooks, your customer center helps you to manage all your customers and your clients. So when I talk about management, you can add a new customer right here. So let's say we have a client that will provide financial services for. For example, we have a client called Joe Tech Limited. Now, Joe Tech Limited is a company that's most likely looking to go public, or Joe Tech is a company that will provide training. Maybe we'll help them train their CEOs on proper financial management. So it's a Joe Tech company, and then you just input every other information you need to know about this guy. You post them on the system. So Joe Tech USA, very important. And then opening balance here, it assumes that you are owing the person. So if sorry, Joe is owing you, I mean. So if Joe Tech is owing you, then you most likely impute the balance here. That's the receivable balances as at a particular opening balance date. So Here we'll click OK. So we've added this particular person as a client. Now remember, you're supposed to set up your currency, multi-currency, because this particular customer might pay us in euro, might pay us in pounds, might pay us in Canadian dollars. Whatever currency that they pay you, you need to also be able to recognize that payment. So you come to edit preferences. So I think that's the first thing you need to do before you start using the system. Multi-currency, company preference. Yes, I use more than one currency. So you can see right now USD. Now, do not limit your mindset to these four currencies here: Canadian dollar, euro, Japanese yen. No, QuickBooks helps you track almost all the world currencies. Can you see right here? So just select the currency that works for you, whether you're in Nigeria, whether you're in Canada, whether you're in Japan, whatever country you are, just make sure you select the right currency and QuickBooks will do the job for you. So here I'm selecting USD as my home currency. So it means that every financial report I'm going to generate, they will all be reported or they will all be displayed in US dollar as their home currency. But doesn't mean that I will be limited to posting US dollar transaction. No, I can post any currency transaction as long as I update the exchange rate. The system will probably generate that report in the USD equivalent of that particular currency, depending on whatever rate is at that point, at that particular moment. So let's proceed with our task. So we're discussing the customer center right here. So I've set up the customer center here, and then you can add more customers. So I'll go back here. I'll post new customer here. So let's also say we provide financial services to Microsoft. So I'll come here. I'll put Microsoft Incorporated. It's our clients right here. And then what currency does Microsoft pay us? Can you see USD, which is our home currency? So you copy right here and then you post here. So let's also say we provide financial services to top other tech companies. So let me pick a tech company like Nvidia, for instance. Here, Nvidia Incorporated, yes. And then USD2. So let me pick another client entirely in different currency. Now, if you want to post the opening balance of a client in different currency, let's say we have a client that is owing us in euro. Now, when you post that on the system and you go through new customer right here, so let's call this particular client, let's say it's Bank of Canada. Let's assume the Bank of Canada is a client. Now, Bank of Canada don't pay us in USD, United States USD. They pay us in Canadian dollar. So here you select Canadian dollar. Now, notice that the moment I select Canadian dollar, this particular section is blurred. So that means if you want to enter the opening balance of a client whose currency or that pays you in a currency outside your home currency, you are expected to use journal entry for that. So assuming this particular client is owing us as at the time we're running this setup. So what do? You go to company, you select make journal entries right here, and then you then select the currency of that particular client, which is Canadian dollar. So what's the Canadian dollar to the Naira? So sorry, to the USD, I mean. So you can as well go online and say 1 CAD to, sorry, you can just do CAD to USD to check the exchange rate. So you can see here 0.73. You can see 0.73. So I can come back here and post here that 0.73. So who is the client right here? So account receivable in Canadian dollar, and then the name of the client is Bank of Canada. Then you can enter 10,000. So assuming it's 10,000, and then here will be your opening balance equity of 10,000 USD. So if you want to post the opening balance of a customer in a currency outside your home currency, you enter the customer name under the customer center, then you come to journal entry, select the currency of that customer one, make sure you also post the exchange rates. Make sure you post the exchange rates. It's very important because system will automatically convert this Canadian dollar into US dollar. US dollar is our home currency. So account receivable, 10,000 Canadian dollar. Now note the name of that client is very important because you cannot impute that without entering the name of that client. So you save and close. So you can see right here, it's already showing under the customer center, 10,000 USD. Now, with this single report I've done, if I go to customers and customer balance summary, you can see the Naira equivalent, sorry, the USD equivalent of that particular currency based on the exchange rate of one Canadian dollar equals to 0.73 cents. So that means 10,000 Canadian dollar will give us 7,000 USD. So that is how to post the customer detail. Now, if you want to update the vendor record of your company on QuickBooks, you go to vendor, the same thing as the customer. The vendor record helps you to manage your vendors' information in QuickBooks. So your vendors are your service provider. So let's say you use a company like TradingView to access your financial market data. So here, TradingView Incorporated is a vendor, and then you come here, you post that into the system. Let's also assume that you pay um, a company like NASDAQ to access stock prices, live updates on stock prices. You come here, you post that too. So these are different. So there are many tech firms. So let's also say that you have a financial service provider like Bloomberg, yes, Bloomberg Incorporated, and then you pay them to access news updates and as well as market data. So these are vendors that you pay in USD. So you can add as much vendors as you want. Remember, vendors are service providers or product supply. But for you as a finance firm, your vendors are actually your service providers. So we've already posted that. So what next on our cost outline? So chart of accounts. Now, important part of this setup is your chart of accounts. Now, what is chart of accounts? Chart of accounts is an account that categorizes all your transactions to income, expenses, asset, or liability. So when you go to list and then you select chart of accounts. Now, when we created the company, we selected financial service as our company. So QuickBook is able to create a chart of account that is probably close to that of the financial services. You can see under the income, you have your service income and then uncategorized income. So I can take this further and edit my service income. So I can call this management fees and charges right here. And then I can switch the uncategorized income to something like advisory services. So if I provide advisory services, so right here, management or financial advisory services, yes. So if there are other sources of income that you know, you can also impute that. Like he writes here, we have corporate training as a service. So I can come here, new, and then set up a new income head called corporate training. So I'll call this corporate training and then save and close. So you can see the three yeah, four. First one, you have advisory services, commission income, corporate trading, management fees. Now, when we invest in assets like equities, bond, we also generate income from them. For equities, it's called dividend income. So I can come back here and set up a new income head called dividend income. So dividend income helps us track income from our investments in shares. Then we have the interest income. So interest income will help us track um, all the interest earned from our fixed income securities. So we have that. So you can set up as many income heads as you want, from corporate training to dividend income to interest income, management fees. You have your commission income, you have your advisory services. So whatever income heads that you think, and then we also have a direct cost as a financial service firm. There is a direct cost of the services that you're enjoying. So your direct costs most likely can come from Like for instance, if you invest in equities, you invest in interest income, and then you pay for market data analysis or market data to pay for you pay to access market data on a site like Bloomberg, for instance. So let's check this out. So let's say you pay Bloomberg just to have access to their market data. So this is Bloomberg, for instance. Now you want to get access to the latest updates in the market so that can help you take buy or sell decision in the foreign market or maybe your local market. So if you're going to pay this guy, this is a direct cost to you because it's actually a direct cost of the service that you provide or direct cost that is connected to your revenue. So I can go back to my chart of accounts and then right click new, set up a direct cost. So I'll select cost of goods sold, right? But then you can also change the name of that particular account. So you can call this subscription, subscription to market data on Bloomberg. Now, note this part. Okay, subscription to market data. Fine. Now, note this part. This particular cost might be the normal admin expenses for other company because of the line of business. So for you, this is actually what you do. This is how you generate your money. So whatever cost you incur in that is directly connected to your core operation, that's a direct cost. So subscription to market data is one of them. Now, if you have managed client accounts, at the end of the day, maybe at the end of the year, you pay them an interest return on so it's called an interest expenses. So you can also track that too, or probably maybe what do I call that right now? Maybe you disburse part of the profit to shareholders or your clients. Yes, your clients. They give you money to manage for them. Now, at the end of the day, whatever profits generate from you have to take some as your own profit and then you send the remaining one. So it could be share of profits. Yes, you can call it share of profits. So here, that's also a direct cost to you as a financial service firm. So I can come here and then I'll tag this share of profits. Do you understand? So you get share of profits, and then you say, okay, so that's also a direct cost to you. So whatever cost you incur just to make your operation easier, especially that drives your revenue, then you have to post that at a direct cost. So I hope you're following this guide and how I'm setting up this book one bit at a time. Now, important part is or investment portfolio. Yes, we set up multiple currencies. Now, bank account is very important. Bank account is very, very key. You can't run a financial service firm on QuickBooks without your bank account. So to add your bank account, you click on new account, new, and then make sure you select the right account type. You know, when you're setting up a chart of account, it is not the account name that matters. System would not automatically recognize your account name or probably treat it the way you want it, except you select the right account type. So if I'm going to set up a new account right here, and I call this account Citigroup, now, the system would not automatically assume that Citigroup is a bank because of the name called Citigroup. No, what the system will use to treat this is Citigroup is the account type I select. So if I change this to income, system will assume that Citigroup is an income head. So it's important to select the right account type. So when you're setting up Citigroup, sorry, make sure you select the right currency right here. And then you can then change the name. You can change the name. So the currency of that account, then the opening balance. So let's say we're working with 2nd of June. You click OK, and then you click Save and New for new accounts. So we have a new account offshore. Let's say we maintain an account with Zenith Bank Nigeria. So Zenith Bank of Nigeria. So you impute the name of that account, and then the currency of that account would be a Nigerian naira. Can you see right here? Nigerian naira, and then you enter your opening balance here. So enter the naira equivalent of that money, and then what is our exchange rate naira to USD? So let's quickly run a check right here. So NGN to USD. So NGN to USD is 0.00073. So you come here, input 0.12373, and then you click on OK right here. So you can see the Naira equivalent. This is it here. So by the time I check my financial reports, you will see that all these foreign currency balances will automatically be converted to Naira. Sorry, to USD. You can see here to USD. So City Group 1,400. So this is the USD equivalent. This is the USD equivalent, and then other balances also converted to USD. You can see the account receivable also in USD. Why? Because we selected USD as our home currency. So let's move on. Now, how do we set up our investment portfolio in QuickBooks? We have exposure to the equities market. We have exposures to the treasury bonds. You have exposure to certificate of deposit. How do you set them up in QuickBooks? So you come here, still on chart of accounts. You click on accounts, new. So what is the account type? Is it an income? No. Is it an expenses? No. Fixed assets? No. So here you would categorize them as other assets. Even if you look at this description here, track the value of things that are neither fixed asset nor other current as such as this particular account. So make sure you select the right account type whenever you're setting up your chart of accounts, because it's very important. So here, other assets. So what am I naming it? I'm going to name it investment portfolio. So investment portfolio, then you click on save and close. Now we only named it investment portfolio as a parent head. So let's now add the individual assets that we own under investment portfolio. So here you go back to the account type as other assets, click on continue. So first one, let's say we have shares in Meta, right? Now, what's the value of our shares in Meta of this setup? So shares in Meta is a sub account of investment portfolio. So the opening balance, that's the value of our investment in Meta, is around 125,000 USD. And then note how I'm selecting the opening balance date. I'm using a single opening balance date. When you're setting up your record as a financial service firm, it's important that you select the right opening balance date. Now, there are two options. It's either you start with the end of the year. So end of the year is where you look at your financial year period, maybe from January to December, or you could run from April to March. Now, end of the year is the end of your financial year, not necessarily January to December. So end of the previous financial year. That's the end of the year balance. Now, the current balance is the other option. That's where you would be expected to close your book as at today. Now, the implication of using end of the year is that when you enter the opening balance for the or closing balance for the previous year, you'll be expected to post transactions from the beginning of the current year to the current date. That's important. So let's say your financial year runs from April to March. Now, end of the year means you're going to post your balances as at the end of March. Then you start posting all the transactions from April to date. Right now, this video is being recorded in June. So meaning you're going to post from April to June. But then if you want to work with the current date or a closer period, I could say today is 3rd of June. Let's work with end of May. So whichever one you decide to work with. The only advantage of the first one is that it gives you the option of posting your full year record in QuickBooks. But then the current one, if you go with the second option, it means that you might probably miss out certain part of the financial report for the year. So, but then the advantage is that it helps you get started quickly. So if you have all your reports, you have all your existing records from the beginning of the year to the date. So why not use previous year record so that you can generate a full year? But then you still own the decision yourself. I'm only sharing this guide for you to choose or help you understand how to use the system better. So here I will click on OK and then save and new. Let's go save and new. Now we also have shares in Apple, and then that is a subsidiary sub account, sorry, of this. So we have invested 780,000 USD in Apple. So that's the value. That's the value of that asset. And then we have exposure to US government Treasury bond. So which is also a sub account of investment portfolio. So far, we have invested 1.5 million USD in that particular account. Yes. You click on save and close. So let's work with this particular investment portfolio. So here we have set up our shares in Apple, shares in Meta, and then US government treasury bond. And you can see the value of each of them. So if I go back to my report and then you select your balance sheet to see how it appears on your report. So you can see here, let's use all to see. Yes, so from the current assets, you have your bank accounts, Citigroup, Zenith Bank of Nigeria. So that gives you total bank. Then you have your receivable from this particular client. Then under your other assets, you have your investment portfolio. You have shares in Apple, shares in Meta, US government treasury bond, and then you can see right here. So you can even sum them up under investment portfolio. You can see right here. And you can sum this up under account receivable, and then you can sum this up under your checking accounts, which is your total balancing. So you see, whatever we're posting right now, system is automatically creating our reports. That's the good part of using an accounting software like QuickBooks. It saves you time when it comes to generating reports. It makes your job easier. As long as you know what you're doing, you are good to go. So let's track our revenue stream. I think I've done this advisory, management, and charges. Now, whatever I might have posted on that chart of accounts is an account head. So what you see right here under the income, these are account head. So you have to create each of these as a service and map them to their specific account. So to do that, you go to list, item list. So item list is where you enter your service head. So here, service, and then we provide advisory services to our clients right here. And then you map this to advisory service. Can you see? Then you click on OK. And then you can as well come here and select, let's click for another one, dividend income, not dividend income this time, corporate training, yes, corporate training, and then you click on OK. So just add as many advisory services or whatever services you render to generate revenue, just add them right here. That makes your job easier. So let's move on to the next part. So haven't set up this basic account for a financial service firm. So how do you post transactions on the system? Now, the first part is how do you invoice your clients? If you're familiar with QuickBooks, invoice is a straightforward thing. There's no two ways about it. First thing is you go to create an invoice. Now, if you look at most of this icon, you will see that there are things that we may not need on the system. So you can deactivate them. You can play around your desktop, take out some of the things you don't like sales order, estimates, time statements, and all that, just to make your desktop screen a lot more simpler or reflect your line of business. So here you go to create an invoice. So if you want to invoice your clients for financial services rendered, you can come here and select. So from this point, you can select your clients. So let's assume that I am training these guys, Microsoft team. I'm training Microsoft team on how to manage their finance very well. Assuming I'm providing corporate advisory services on to Microsoft, maybe they're looking to take one of their subsidiaries public. So what do? You create an invoice to track that particular service. So you select an invoice right here, and then under the item, you select advisory service. Now, remember, your invoice will most likely be in the formats that you don't want. So you can change, you can take out some of these column like quantity, rate, you can take it out. So you go to formatting, customize data layouts, make a copy, and then you click on this column right here. So you uncheck this, we don't need it. You uncheck this too, we don't need it. Uncheck. So for rates, maybe you want to charge based on the number of trainees that are coming in, maybe number of CEOs and all that. So let's do this. So you're advising them and you're charging them based on number of CEOs that are coming on board. Maybe you want to train all the CEOs of their subsidiaries. So here you're charging them like 140,000 USD right here. So that's where you can even leave the quantity too if you want. So you can say being corporate advisory services provided to MSFT subsidiaries. So depending on what works for you, and then you can just post this. Now, the moment you click save and close, this becomes a receivable figure in your book. So if I click on save and close right here, and I go to my reports and I select customers and receivables, customer balance summary, you can see right here. So the clients that are owing you now are Bank of Canada. This is an initial balance plus the 114,000. So if you receive payment from these guys too, you can as well go to receive payments and then select the particular client that's paying you. Now, when you receive payment from a client, I really do not like to receive payment and record deposit. So I like to combine both receive payment window and record deposit. So that way it makes my job easier because I've seen situation where clients will receive payments and they will think that's the end of the posting. So they ignore record deposit. So what I do is I'll go to edit, preference, select payments, then deactivate this. So what happens is whenever you receive payment from a client, system automatically takes the money to an undeposited fund account. So like a default account. So he assumes that you do not know where the money is going to. But then the research, I know where the money is going to because there are times where a company has a payment policy that requires all customers or all clients to pay money to certain accounts. So that's automatically a direct instruction on where the money should go to. So here I would close all this and reopen again. So what am I trying to achieve right now? I'm activating my receive payments and record deposit on a single window. So that's what we're doing right now. So if I go back to receive payments here, you can see that under we now have deposits too. So by doing this, I do not need to record deposit again because I've moved this feature into this particular receive payment window. So when I select my customer or client, so out of 140, let's assume that this guy is paying us 75 right here. And then you select the bank where the money is paid into Citigroup right here. And then you click on save and close. It's as simple as that. You can as well go to your banking news register, select Citigroup to see how it will display on your report. Initial balance of 1.4, then you have another deposit of 75. So that gives us 1.475000. So I think that separates or that answers your question on invoicing. So the most important part of this section is the portfolio management side. So how do you record the investment in equities, a new investment in equities? Oh, we want to buy shares in a company like, let me use a company like Intuit, for instance. Want to buy shares in a company like Intuit. So on QuickBooks, how do you record share purchasing into it? Very simple. What you do is you go to write check. Now, remember, your stockbroker is also your vendor because they are providing services to you. They are helping you to execute, buy or sell trade in the market. So let's assume that you use a broker or called Interactive Broker. So let's just use Interactive Broker. So all the fees and charges of Interactive Broker should also be factored into your account. So Interactive Broker is a vendor because they provide services. So if you want to track new purchases or new investments in shares, you go to write check. You go to write check, and then you come to pay to the order of. So you probably select Interactive Broker. That's the vendor that you pay the money to help you execute that trade. Now, from this account, what are you going to select? You say shares in Intuit. Intuit is listed on US stock markets. Some of us, I don't know. Here you other assets, continue. So that's going to be a sub account of investment portfolio. So this is a new share in Intuit. How much are we investing in Intuit? 75,000 USD. So you can see being investments in into its company via the stock markets. So we've invested into it right here, and then you click on save and close. Now, if you do that, when you go to your report, go to your balance sheet, let's see how it reflects in our financial report. So you can see under investment portfolio, we now have shares into it. Can you see right here? So 75,000 USD. So if you also buy more of bonds, more even ETF, if you invest in ETF, you can as well come here to do that. So let's say you invest in SPY ETF. SPY ETF tracks top 500 companies in the US market. So how do you post that? Same procedure. You come here, you select your vendor, which is your broker, and then you can say investments in SPY ETF. Maybe because you want to diversify your portfolio. So you other assets right here. So this would be a sub account of investment portfolio. So how much did you invest here? So 450,000 USD. So being an investment in S&P 500 ETF. And then we click on close. So if I go to my reports and then select my balance sheets, so you can see here SPY ETF. So this SPY, this is 450, not 4.5. So this is throwing account into negative balance. So let's reduce it here, and then you click on save and close. So this should be 4.5, 4 million, sorry, 450,000 right here. Yes. So that's, you can see here. So you can see how the system is helping you to track your various exposures to different financial instruments. So let's move on. Now, how do you record dividend income and interest income on financial assets? Very simple. To record the dividend income, let's assume you have received your cash dividend. You go to the company, make journal entries. Simple, make journal entries. So there are two accounts that this is going to hit. First one is your dividend income account, and the second one is your bank account. So you're going to create your dividend income account. So you receive a dividend of 15,000 USD, and then here, so the money was paid into Citigroup right here. So you can say gain dividend income from Meta. Meta recently paid out dividend. So here it is, and that's all. So if you have more interest income to treat, you can also come back to your journal entry right here, make journal entry, and then interest income. So this will be your interest income right here against your bank accounts. Now, this interest income, let's say you receive 5,700 here, and then here 5,700. Now, assuming that this interest income is a regular flow that comes in every 6 months or every year. Oh, you invested in treasury bond, let's say long-term treasury bond, US government 10-year treasury bond, and every year or maybe every 6 months, you're expected to collect 5,700 interest for the next 10 years. Now, rather than posting that manually on the system, you can actually automate that process in QuickBooks. So what do? You memorize it, and then you click on automate transaction entry. So here you can see being, so you can just call this interest income on 10-year bonds. So now, how often do you want to post this on the system? You can see this option daily, weekly, every 2 weeks, twice in a month, every 4 weeks, monthly, every 2 months, quarterly, twice a year, annually. So if it's twice a year, so you click on twice a year, right? So now this particular payment will come in how many times? So you see number remaining right here. Can you see? So it's going to be posted twice in a year. So twice in a year means assuming that you started in January, you receive in June, and then you receive in December. June and December, June and December, June and December. So instead of posting it 2 times in a year. Now, if you do that 2 times in a year for the next 10 years, it means you're going to receive it 20 times, right? Now, this is the first, what we're doing now is one of the posting. So meaning we would have 19 remaining. So system is going to post it 19 times. So the next one that is going to come in, already in June, will be when? Do you understand? Will be when? So if we receive here the next 6 months, it's going to be in December. So here you come here, you put December 2024. So that's the next 6 months because this is twice in a year, every six months. So system automatically automates this posting for you. You click OK, and then you click save and close. So what happened is that every six months, when you go to memorize transaction list, system will automatically auto post this interest income. So when you go to your interest income account for the next 6 months, you will see that that account would have increased by this amount. So for the next 6 months, this is going to be posted. Now, for the next 10 years, expect this record to continually update itself until the maturity of that bond. So if I go to my report and I select profit and loss account, you can see right here, system already picks the advisory income, dividend income, and also the interest income GCS. So all the interest earned on your assets, system will automatically post them as income heads in your P&L account and also the second leg under your bank account because the actual cash received on your record. So how do you treat interest earned? But no, I've discussed that. I've recorded dividend income. Now, how do you treat revaluation gain or changes in market value of your assets? Very simple and straightforward. To treat revaluation gain, just look at the value of your assets over time. So if you go to our report right here, now you see that, let's say our shares in Apple was 780,000. Now the value has moved from 780,000 to reach a high of 795,000 naira. So when you look at the market price, the share has moved from 780 to 795,000 naira. So to treat that gain, you come to company, make journal entry. So here you have what we call shares in Apple. So the difference is 15,000 naira. So shares in Apple will be debited with 15,000 naira, sorry, 15,000 USD. And then, so the second leg is your revaluation gain counts. So second leg is your revaluation gain accounts, which is an income to you, which is an income to you. Then click on continue. So this is it here. So by the time I post this, the value of my shares in Apple automatically increases by 15,000 USD, while the difference, which is a gain, is 15. So this particular gain might probably come from, so you can say being revaluation gain on Apple shares. Which means in market price, Apple share has appreciated. So then you can say this happened on 5th, then you click on. So if I go back to my report, so let's look at our P&L right here. So you can see dividend income. Yes, dividend income advisory. So you can see the valuation gain, right? So if I go back to my report and I select my balance sheet, so you can also see Apple share has increased right here. Shares in Apple has increased. Let me double click here. Should I post the shares in Apple very well? Shares in Apple, 780,000. So let's increase this to all. Yes, this is it here. So 795,000, you can see here, if I double click, so you can see the gains of 15,000. So that's how you value other assets as time goes on. So when you want to post revaluation gain, just debit that asset and then credit revaluation gain account, which is a P&L item in your record. So let's say that our investment in SPY ETF has increased from 450,000 to 650,000 naira. So because of massive growth in share price. So you go to your journal entry here, and then so investment in SPY has increased by 200,000 USD. So this will be revaluation gain, which is, you can see right now, and then you click on save and close. So this particular account has moved to 650. Now, if you go to your reports and then you search revaluation gain accounts or your P&L accounts, you will see that revaluation has moved. You can see here, you can double click. So if you double click on evaluation gain, so you will see the each of the reasons for that. You can see here shares in Apple, investment in SPY. So if it's reduced to, you're able to see that too. So let's assume that one of the assets recorded a loss. So this account is supposed to be revaluation gain or loss, not just revaluation gain count. So let's change that. So I can right click here, edit. So I can say revaluation gain slash loss. So let's also assume that one of our investments has dipped. So let's go back to the balance sheet here. So let's say investment shares in Intuit. No, let's use Meta. So Meta has dipped from 120 to 115. So Meta has lost 10,000. So you go to company and then make journal entries. So here, this will be shares in Meta has lost 15. So 15,000 right here. And then revaluation 15,000. So you can say being loss of value on Meta shares as a result of dip in market price. Yeah, so you can then click on save and close. So you can see here that shares in Meta has dipped to, let me, you can see here 15,000. So you can see 110. Now, if you go to reports, profit or loss accounts, and then you see evaluation gain, double click here, you can see right here. So it was 215, and then we lost this and then reduced to this. So as the asset is changing value, the valuation gain is also following the same. So at the end of the day, all your gain less all your losses would give you evaluation gain. And if your gains are less than the loss, it will give you evaluation loss. So this all depends on the market price of the assets, the value or market value of that particular asset. So I hope that's clear on that. So how do you treat sale of financial assets on maturity? So let's even say you want to dispose of your Meta shares because you think that Meta stock price will go down from your own analysis. So how do we sell off Meta shares? Very simple. So Meta is worth 125, 110, not 125. We've already revalued it. So Meta is worth 110. Let's say we want to dispose of Meta shares. So you come here, company, make journal entries. So here is Meta, shares in Meta. So we're disposing of shares in Meta at 105, right? Now you come here, so 105, and then the other leg right here is going to be 5,000. So that automatically means Meta shares. So let's use 110, sorry, not 105. Yes, yes. So part of this money is a fees paid to, so brokerage fees. So brokerage fees paid to, so it's going to be a direct cost. So direct cost of 5,000, and then revaluation gain or loss of 105. So what does that mean? It means that we have disposed the Meta shares completely. Now, out of the proceeds, we paid for 5,000 as brokerage fee, and then our gain or loss is 105. It's not gain or loss, sorry. This is bank account. So that's the proceed. Proceed from the sale. Yes, this is it here. Bank account. So the proceed from this sale is 105 credited to our account. So I will say being a sale of Meta shares and then save and close. Now, if you go to report, you can see that you're no longer seeing Meta shares right here. Now, if you go to banking, use register Citigroup. So you can see the inflows. You can see the inflows right here being sale of Meta shares. So this is quite straightforward. It's simple. Using QuickBooks for a financial service firm is very simple and straightforward. So you can see how I am able to post transaction easily. So we have your bank transfer, you have your exchange rate update reconciliation. So how do you process your bank transfer in QuickBooks? You go to banking, you select your fund transfer. So from one bank to another. So let's say we just open an account with Bank of America. So you quickly come here, you add your Bank of America in QuickBooks here, and then you click on save and close. So we want to move money from Citigroup to Bank of America. So let's assume we want to move 500. So here you enter the amount, look at the USD currency, and then save and close. So by doing that on your balance sheet, you can see right here, you have a Bank of America, you have your Citigroup right here. And if you check your statements, your reports or your bank statements, you are also able to track all the payments, all the inflows and outflows from your Bank of America account. So if you're familiar with QuickBooks, I'm sure the rest should be seamless, like how to make payment for expenses, how to update your exchange rate. To update your exchange rate is also simple. If you go to company, manage currencies, currency list. So here you select all the currencies you want to update their exchange rate and are able to quickly post them on the system. So here, if I'm looking for euro, okay, this is euro. Double click here. So you select the date and then update the exchange rates right here. Very seamless. So if you have used QuickBooks before, every other thing should be seamless. How to check reports is very simple, very straightforward. I'm sure you've seen how I'm checking reports on the system as we post transactions. But the most important part of this particular section is knowing how to use QuickBooks for a financial service firm, especially setting up your book and then being able to post transactions. That is very important. So whether you run an investment banking firm, an asset management company, or private equity, this is just a straightforward way to manage your books in QuickBooks Enterprise without any issue. Like I said, whatever I might have discussed here also works for the basic version of QuickBooks, which is Pro, Premier, or Enterprise. Now, your reason for using Enterprise will be because you feel it takes more than 5 users. So meaning you want more than 5 users to post transactions at the same time. So that's very simple. Now, if you want us to set up your QuickBooks for a financial service firm, feel free to reach out to us. You can use the link below to go to our website, accountingsoftware.com.ng or quickbooksnigeria.com. You most likely reach out to us. We are ready to help you set up your book. If you have specific needs and specific transaction cases and you want us to support you on, feel free to reach out to us. We will definitely help you set up your books of accounts. We help clients in different countries. So we're not limited to the region that we are. I set up books in for clients in US, in Canada, in different countries, even though we operate from Africa. But here we have been able to show that we know what we're doing in this particular space. And if this is the first time you're watching this channel, kindly hit the subscription button, turn on the notification bell so that when I release more videos like this, as an account person, you also get an update.